Coming up today, we have a little bit of stabilization in the markets. You're seeing a little bit of more risk appetite coming in. As you see, the volatility getting crushed here today. VIX down 8% on the day as of time of recording. Equity indexes, the S&P, the NASDAQ, Dow Jones, the Russell, all up today. The dollar index continues its retreat from that 99.5 handle resistance. Now back in 98 territory. You're seeing a flight into risk currencies. You have the Kiwi dollar and the Aussie dollar both up big on the day with some modest gains for the euro dollar and the pound dollar. Gold is at a very interesting level of support. We'll go ahead and talk about that for sure. Oil is still elevated and Bitcoin is creeping up here, up 7% on the day. Hey everyone, Alan Perez here, and welcome to another daily recap where I go over what's going on in markets, what's driving them, my current trades, how I plan to manage those trades, and of course, new trade ideas that I'm looking to act on. Like always, this is not financial advice. I'm just a random guy on YouTube sharing my thoughts and opinions. And without further ado, let's go ahead and get right into it, starting off with equities. The trading day looked a lot different today with volatility getting crushed. The VIX is now down 9.72% on the day, fully retracing the entire move that we got when we got the initial strikes with the US and Israel targeting Iran. You can see today that markets had an appetite for risk. S&P, NASDAQ, Dow Jones, Russell all up on the day. And in a time like this, your guiding compass when it comes to risk on, risk off is going to be this chart here, the VIX. The VIX measures volatility in the options market. When the VIX spikes really high, that usually indicates that there is risk off trading. And when it comes down crashing, that means that markets are trading slow and steady. And that usually coincides with risk on trading. For the S&P 500, you can see that for 3 days in a row, we've traded down into the 67.75 level, this level of support. And each one of those days, you have these strong wicks pushing price higher. That means buyers are stepping into the level. And for now, I take this as a sign of clear support at the level. Same thing with NASDAQ. You've got into this actually lower level here that I really like, this 24,200 level. Not quite there. We missed it by just a hair, but we pretty much got close here. Interesting thing with the NASDAQ, you are seeing a bullish reading of 8 on the NASDAQ. So that is very, very interesting to see. At this point, going down into the lower time frames here, if you were to get a pullback into this level of support, I think trading this to the upside might not be a bad idea. You have a strong score here of +8 here on the edge finder. You have your technical, sentiment, and fundamentals all lining up here in the blue. We got ADP numbers here today. It beat expectations. The only hurdle that we have to get through now is non-farm payrolls, unemployment rate, and retail sales all due this Friday. But right now, this seems to be like a good trade idea. And so far, during this whole escalation with US, Israel, and Iran, the US stock market has proven itself that it is quite resilient. Going down into currencies here, my bread and butter, I like to look at the US dollar here for guidance because this one has been the stronger safe haven of everything here. You can see that the dollar index is pulling back a little bit. Now, if I put a fib from this leg up that we had here, this safe haven bid that we've seen on the dollar, you can see that now it's getting towards that 50% retracement level. I'm looking to see a continuation play here. So if we can get into this cluster of candles, I talked about this yesterday, but if you can get somewhere right here, I'm looking to trade dollar to the upside as long as the current escalations are still high. What that would look like here is on the euro dollar. This is basically the dollar index, but inverse, trading up into this 50% retracement or 61.8 in this little cluster of candles, very similar to that dollar index. If we get up there, I'm going to go ahead and trade this down lower. I have my chart alarm there. And of course, you still have a bearish reading here on the edge finder. The only thing that hesitates me a little bit is that if we go to the EU economic heat map, it is actually doing quite well. So the actual fundamentals of the EU are not too shabby. You did have the unemployment rate today come in lower here at 6.1% versus 6.2 last time, and you had CPI come in lower as well yesterday. So you can see on the bottom right of my screen the euro impacts here. This is essentially the reading of how the euro has beaten or missed recent data releases. You can see that the euro dollar is actually getting an 80 score, which is pretty good. However, if the underlying landscape still persists of this whole thing with US and Iran, that Strait of Hormuz passage is very important for the eurozone. Some have reported that gas prices are already 20 to 25% higher. So if that still persists, I think that theme will override the current story and we can trade the euro dollar lower. Now, what happens when all of this is all behind us and if things get resolved? I have a backup plan for that. I like the Aussie dollar long. I mentioned this yesterday in my video. Going to the weekly time frame here, you can see that the Aussie dollar is super resilient, especially in these times. The Aussie dollar is a risk on currency and it's been performing quite well here. Now on the weekly time frame, it is printing a green candle as of now. You do have some sticky inflation in Australia. I can show you that. Looking at CPI here for the Australian economy, They are stuck at 3.8% for the last 4 prints. Interest rate projections for the Aussie dollar are looking to come in higher, and that will of course continue to support the Aussie dollar. So given this resilience in this current environment, if we can get a pullback into this previous level of resistance now possibly turn into support, I would love to take this trade to the long side. Yields here are pretty sticky. You can see the 10-year yield still up on the day, almost up 1%, and that tells me that the bond market thinks that this is not quite over yet. Gold here looks like a fantastic setup here. We were recently range bound between the $5,100 and $4,700 an ounce. You can see that indicated here. We broke out and we have now since pulled back into this area. You might be seeing a retest happening right as we speak here. The edge finder at one point was showing a 6 bullish reading. Now it's down to 4. However, what would really change this for gold is non-farm and unemployment rate coming up this Friday. You can kind of think of gold as a counterpart to the US dollar. As of now, analysts are predicting that US retail sales are going to come in weaker than expected, and so is US non-farm payrolls coming in at 58K versus 130K previously. So if you see those weaker figures coming in for the US dollar, then that will go ahead and tilt the reading for gold back into bullish camp, making that pullback into this 5,100 an ounce support a pretty strong trade idea. We'll wrap it up here with oil here. Despite the slight risk on trading that we're seeing today, oil is still elevated near the highs, right at 76, just shy of that 78 high. There's a lot of momentum behind it. The fundamentals support it. This chart will set the tone for the trading days ahead. If you see a breakout of oil, then you can probably expect another wave of risk off trading. And if you see oil just below this level, then it's possible you might see risk on continue to shine. And we'll end it off here with Bitcoin. I'm not a crypto trader by any means. I'm not a crypto expert either. However, it's pretty notable to say that crypto is showing some resilience despite all of this, right? But while all of this is going on, crypto has been just chopping sideways here, and it's now making a break higher, up 7% on the day. Now, is this a pullback into resistance and we trade it lower, or is this a full-on recovery? I have no idea. That I would ask for your opinion in the comment section below. Feel free to let me know what your thoughts are on crypto. But with that, have a blessed rest of your day, and like always, trade safely. Bye-bye.